All right, let's take a look at Wells Fargo this morning. The bank out with its earnings, and stock is under a little bit of pressure. It's down by about 1.75% after coming in with earnings that they are looking at of 86 cents a share on a net income basis. That compares with 75 cents from a year ago. So it's higher from a year ago. If you're trying to compare this to what the expectations are, it's not necessarily apples to apples because there's a lot of noise in this. You've got 40 cents a share that they are taking for that special assessment from the FDIC. Of course, that was with the collapse of the banks last spring. This is the big assessment that's being given, especially to all these big banks. Another 20 cents goes for severance expenses for this bank. And then they've got a gain of about 17 cents for tax benefits that come through this. So you strip it all out. A little tough to say. Revenue did come in slightly above expectations, $20.48 billion versus the 20.3 cents the street was expecting. And net interest income that Leslie was just pointing out was a problem potentially for Bank of America. Net interest income coming in at $12.77 billion. Street account was looking for around that level, $12.74 billion, so not necessarily out of line, but obviously the street's going to be looking at that very quickly. As rates have come down, that's going to be an issue whether the net interest margin gets pinched. Net interest margin for Wells Fargo, 2.9%. And return on equity, 7.6%. So we'll continue to watch this, but that stock right now off by about 1.7%. And a programming note, Wells Fargo's CFO will be on Money Movers. That is today in the 11 o'clock hour, first on CNBC.